Good morning, everyone. This is Rob McDougall with Zhang Financial here with your weekly economic update. Today is Monday, May 20th, 2024. Last week, not a lot of activity in terms of economic data. The focus definitely on inflation, and in that we had some mixed data points. So on Tuesday, we had the April Producer Price Index, the PPI and PPI Core, and both came in higher than expected. So PPI came in at 0.5%. It was expected to come in at a positive 0.3% month over month. And PPI Core was expected to come in at 0.2%. That also came in at a 0.5% increase month over month. So not a great set of data points in terms of inflation expectations. But then offsetting that, the next day on Wednesday, we got CPI and CPI Core. And that was sort of in line to slightly good. So CPI came in a little better than expected. It came in at 0.3% month over month, and the consensus rounded up was 0.4%. So that was a slight beat, and then on the core, and then CPI came in at consensus at a positive 0.3% month over month. So sort of a push in terms of economic activity last week. We had a few other indicators, nothing that really moved the needle. So now expectations in terms of GDP growth. GDP growth for the second quarter here in 2024. The Atlanta Federal Reserve took down their expectation. They usually do a weekly update, but did their weekly update last week and took their expectation down from 4.2% down to a 3.6%. Again, last quarter was highly disappointing in terms of expectations. Expectations were 2.5%. It came in at 1.6%, and fourth quarter was really strong. So this number looks really high, but Atlanta Federal Reserve has done a pretty good job over the last couple of years of addressing or assessing where the market is at any point in time in terms of GDP growth, so we'll see. Also last week with that inflation data, we take a look at what happened with the expectation for the 10-year inflation rate, and it barely moved. It went down a couple of basis points, but it's at a very solid level at this point. The expectation for inflation now for the next 10 years is at 2.32%, down 2 basis points week over week, but that's a very good number. Then we take a look at the Fed funds future, and expectations for a Fed rate decline, which everyone has been waiting for. And so we have another meeting coming up here June 12th. It'll be announced, the rate decision. And a little bit of movement last week in terms of expectations, but nothing big. So the week before, the expectation of no cut was 96.5. That came down a little bit to 91.1%, meaning 8.9% probability that the Fed will indeed do one rate cut. So the odds improved a little bit, but it's highly unlikely they're going to make a cut during the June meeting. And then we take a look at the same data series for the end of the year and see what the expectations are for no cut at all. Those came down a little bit. It was 11.2% the week before. It came in at 10.8%. And the expectation of at least 2 rate cuts, that improved a little bit. It was 55% 2 weeks ago. Finished last week Friday at 56.7%. So all those movements, nothing of real significance, I would say. So in terms of how the markets responded to this late news week, both equity markets here in the U.S. and international and fixed income, very good week. So S&P 500 last week up 1.6%. MSCI World ex-US developed ex-US up 1.44%, almost the same as the S&P. But then emerging markets were actually up 2.63%, and something that's been trending this way for the last several months. China having an outstanding week. They were up. Chinese equities were up 4.1%, and for the year, China equities are up 15.3%. And the S&P is actually up 11.8% on a year-to-date basis. So China is outperforming the U.S. on a year-to-date basis, something we haven't been able to say in several years. So in terms of fixed income, we had both the 2-year and the 10-year yield drop. 2-year yield down 4 basis points, the 10-year down 8 basis points. So the Bloomberg U.S. Aggregate Bond Index was up 0.57% last week. Still underwater for the year. It's a negative 1.4%. So let's move to economic activity that will be released this week. And there's really, much like last week, it doesn't look like it's going to be market moving, anything in it. We have a couple of housing-related metrics that are coming out, both expected to be a little weaker for the month of April than it was in the month of March. That's both existing home sales and new home sales. The expectation for jobless claims to be reported last week spiked up a little bit to 222,000. The expectation for new claims for this week, reported this week, 220,000. On Friday, we have 3 data points that really I don't think are going to make much difference. Durable goods, ex transportation. Those numbers are expected to be down significantly for the month of April from the month of March. So in March, durable goods in total were up 2.6%. They're expected to drop down to a positive 0.5% month over month. And then durable goods ex transportation was up 0.2% of the month of March, and that's expected to be almost flat, just barely positive at 0.1% month over month. So that's it for a recap of last week, the markets, economic activity, and a preview of the economic activity coming up this week. Thank you so much for your attendance. We'll look forward to seeing you next week. Thanks.